And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to all my favorite futures friends and family. It's time for the market forecast for Wednesday, July the 27th. Yes, it's FOMC day. Doesn't mean that we can cast aside our efforts to find accurate context. Always think about risk management and please remain patient. Trade happy today. Happy traders make better traders. I've known that for a long time. And remember our acronym for the market forecast. It's ACH. Anything can happen. We are going to protect today. We are going to be patient today. And we are going to profit today. If we go in with a positive mental attitude and internal dialogue, we can create better outcomes by the end of the day. Economic numbers this morning, 7:30, the durable goods orders came out. The core durable goods, which does not include transportation, they were looking for 0.2% higher, came out 0.3% higher. The overall durable goods, which they were looking for a minus 0.5%, came out a positive 1.9%. A lot of orders for some of these durable goods, and mostly it seems in transportation, planes, cars, trucks. So we're still getting some good action that way. Unfortunately, that's going to keep prices higher, but I think overall it's a good thing for the economy. The trade balance, we had a big drop in the trade balance. Last month's trade balance was negative 1.4 billion. It came out negative 98 billion this time. So maybe a little less money going overseas. Retail and wholesale inventories, the wholesale inventories was the only one that was really noticeable and higher. We're still waiting for the 9 o'clock number, pending home sales, 9:30 EIA petroleum status report. 10 o'clock, the survey of business uncertainty. Now, this has never been on the radar, but as many people are speculating, how we're going to be doing in business. Are we going into a recession? I put that one on the list just to keep an eye on at 10 o'clock this morning. And of course, that's in Central Time. And 1 o'clock Central Time, of course, we have the FOMC announcement. I believe everybody has settled in on the idea that it's going to be a 75 basis point increase. That is what I think has been baked into the marketplace. And if there's something unusual that comes out at that time, of course, we're going to have to be cautious and protect ourselves. Always use a stop. You are going to need to protect yourselves at all times and every day, and it just seemed to be more important on days like today. And then at 1:30 Central Time, of course, the Fed Chairman Powell is going to be having his press conference, and I'm sure it's going to be well scripted. And if he asks any questions, that's when we're going to need to worry. As far as what's going on in the world, it is Fed Day. Again, we're looking for a 75 basis point rate hike. Microsoft and Google missed the mark yesterday as far as earnings per share and revenues, but they both came out and bolstered the market with some really positive future expectations as far as revenues are concerned. Stock earnings today, we had T-Mobile came out missing on both, ADP beating on both, CME beating on both, and Boeing missing on both. We're waiting for Meta, Facebook at the end of the day today, as well as Qualcomm and Ford. There's a long list of earnings today. But we know that the main focuses are, of course, going to be on our economic information as well as our FOMC meetings. Of course, at the end of the day, the Facebook, can certainly shake things up a little bit. Crude prices are higher that overnight, but within balance after the API announces a pretty stiff 4 million barrel draw in crude stocks here in the U.S. The EIA is forecasting a smaller 1 million barrel draw. So we've got tons of information. Keep your head on a swivel. Be very inclusive of information that the market is telling you. It's going to be very easy, I think, to discount things that we disagree with. So I'm really going to try and just to trade what I see in the charts today. I'm just going to be looking for cheap trades. What's a cheap trade? Well, when you're looking at your charts, you're looking at your profiles, whatever it is, the thing that I'm looking for is getting in very close to or even at points of invalidation. Sometimes we have a tendency to jump into trades a little bit too early, and our stop ends up being where we really wanted to get into the trade. And so I'm just going to be really careful with that. The dome's a little bit thin this morning, but that tends to happen before the open as far as the equities are concerned. We know we're going to have probably some volatility, a little lower liquidity. Make sure you kind of account for some slippage in your stops, especially if things go a little bit crazy later on. And as always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast with all my friends and family here. And make sure you subscribe to our YouTube channel so you get notified when we do go live. The VIX checking just before 7:30, just after 7:30, I should say, was down about 20 to about 24.31, just slightly lower. The dollar index was a little bit lower this morning at 106.91, and the yield on the 10-year still kind of attenuating here right around that 2.79 level. So no major changes there this morning, as I would expect with everything that we've got coming out today. So we've got Shaw first in the room. You win the prize. That letter opener. It's good to see you. Ready for the fizzle. Yeah, you never know. It could just end up being a big nothing burger today at 1 o'clock if everything comes out as expected. And it's already in the market. Frederico, good morning. Brian Patrick Tachyon, good morning. Toph, George Duque, good morning. DA, good morning. Terry King, Alfred, good morning to you as well. Jules, buenos dias. Theo, good morning. Ray, my wildebeest trader, is with us this morning. Always a pleasure to see you here with us, Ray. Thanks for stopping in and saying good morning. Manuel Caesar, Bill Phillips, Brody, JD, good to see you. Vince, my guy, good to see you. Anthony, good morning. Andy Bleed, good morning. Equanimous Trading, good morning from outside of Chicago, where we saw Mike Campbell tear it up with Chris Stapleton at Wrigley Field. And maybe you were at the game yesterday, it sounds like. Bob, another big day ahead, ready to go, compadres. Good to see you, Bob. Jerry is awake, and I hope John is too, of course. Good morning. Today's quote from Unicus: "You can't move the market. You can only move yourself." Very in line with what Dr. Menaker says. You're not only trading the market, you're trading yourself. You're trading your inner market. James Harris, good morning. Denny Z. Zerain, good to see you. Rob T. Denise, always a pleasure. My guy Mason is in the room, in the house today. Good morning, Mason. You got an early start with the puppies today. The Rooster, good morning. Only 850 left before passing step one in the 150K combine. Nice job. Don't focus on getting there. Focus on staying in process. We find that if you start getting close to a target, a financial target, or a time-based target, it tends to push us out of our strategy just so that we can get to that level. Just trade your strategy, trade your way. Marcelo, good to see you. Trading Research, Hagel Matters. Anissa, good morning. Good Make Hogue Money session yesterday. It was. So we ended the session yesterday with a position onto the short side. We had a profit target. We had a stop, and I said, if you guys are if we're gonna keep this on, I will try and do my best to use a trailing stop to try and stay in this trade. And as usual, and as I mentioned yesterday, I can screw up a trailing stop better than anybody. So I think we ended up making about 10 handles on the trade when I think our goal was about 20 because we got ticked out on the trailing stop. Trailing stops are an art form. And being an artist, that's one art form I have never been able to master. So we did end up having a good day yesterday, 2 winning trades. That's all we're looking for, right? Rusty Golfer, you enjoyed Make Hogue Money yesterday as well. Good. Well, we are always looking for people that want to talk and people that want to, show their charts and offer opportunities for us. It's actually gone pretty well. I mean, we're up almost $5,000 in Make Hogue Money since we started. I'd say that's pretty good. Sarah Hall, good morning. Prayers and love to you as well. Joe, good to see you. Vince, am I crazy, but wouldn't finding a way to reduce energy prices help bring down inflation instead of just killing you all with interest rate hikes? There's so much that our government and that the Fed is doing that is, it seems everything is in fight, is debatable. It would make sense, right? If we could bring down energy prices, that could bring down the price of everything because everything takes energy to bring to market or to produce. Makes sense. Not crazy. Correct. Rooster says. Yep. Good morning, GNR. Josh, so if we are in a trade when 1300 comes, we will break a rule, right? Only if you are past step 1 in the trading combine. Step 2 in the funded accounts, you're going to need to be flat at 1 p.m. a couple of minutes before, so that you don't put yourself at risk of any major moves that come. It may not be a big deal. But yeah, if you're in step 2 or in any of the funded accounts, be flat when the FOMC information comes out. Common sense, right? Something that doesn't seem so common anymore. Denny, that's exactly what I was trying to say that you said much more eloquently, so thank you very much. Chilling with Dylan, Steven C., Nicholas, good morning, Christopher Dimitar, William Emmanuel. Nice to see. Well, that's very nice. This bass voice comes from a lot of screaming and hollering in a trading pit for so many years. Can't move the market and don't move your stop, Stephen C. It's Nicholas, the Rooster Facts. I nearly lost my entire combine with exactly that much left to go. Just getting excited. That's right. Put that behind you. Focus on just looking for the next good trade. You don't even have to look for it. Sometimes they just come to you. All right. The Nick Piro, good to see you. Trading Research, continuing the conversation with Vince about reducing energy prices, but that doesn't necessarily fit the stock portfolios of those that are in the know, that are all invested in, you guessed it, solar and wind energy. Nice no Cahibas. Well, maybe some of that as well. Saying Make Hogue Money, but did not receive the email invitation. Sorry about that, Joe. I would try and sign up again. We are going to have Make Hogue Money again tomorrow. Here is our website link to try and get into that, and maybe I can try and look and see if there was some reason for that. But just try again, Joe. We want to get you in there. We want to hear your ideas, thoughts, and your votes on those trades. All right. So I got a good night's sleep last night. I'm hoping you did too. I'm trying to remember to really try and stay patient. Yeah, that's a good idea, Trading Research. Definitely check your spam folder. Yeah, I'm glad you thought of that trading research. Thank you. And I'm keep telling myself that I really need to be patient today. I have to be well aware, and this might help everybody stay patient today and really wait until the market gives you the opportunity that you've been waiting for. Sometimes we don't even realize that we're waiting for an opportunity until it kind of smacks us in the face. I've already relegated myself to the idea that I am going to miss a lot of good trades today. And I'm going to accept that, and I'm going to just move on and continue to trade happy until the market offers me that opportunity that I've been waiting for. Sometimes, like I said, I don't even know what it is and where it's going to come, but just once in a while, you'll see something and it will hit you, and you will be able to respond knowing that it's intuitive and not impulsive. And that's the one that I'm going to be looking for. If I get impulsive and I get too aggressive early in the session today, I could easily put myself in a hole where I won't even be able to participate later on in the session. So just keep yourself in check and be cool. Rusty Golfer is going to go to the driving range and then come back for FOMC. So he will be nice and fresh and getting some exercise. And hopefully things go well at the driving range, because if you have a bad day at the driving range, that can bleed into your trading. Try and keep the two separated, Rusty Golfer. I know how emotional golfing can be. That's why you are my spirit animal. I am Rusty Golfer, and we've got our good friend Ray here. That is the wildebeest trader. He sits and waits and stalks the market until the market walks by with a limp, and then he jumps on it. And I'm excited that he's here with us today. So, all right, we're all going to be wildebeest traders today. We're going to be the lions sitting in the brush, waiting for the injured wildebeest to come by. And hopefully the injured wildebeest market does come by today. We'll have to see about that. Let's jump into the charts and take a look. Here's the E-mini S&Ps. So Friday, we lose open interest. Monday, we gain open interest. Yesterday, we lost open interest again, another 11,000. So overall, on this pushback, we've been losing open interest. Why is that so interesting to me? Because since the beginning of this year, down days have been piling in open interest. Up days have been losing open interest. Since Tuesday, we've been gaining open interest on up days and overall losing open interest on down days. Do we have a potential bull flag forming here? Technically, I would say that that's what this is, but we know that we have extremely important information coming out today and tomorrow. So, as we say, our acronym here is ACH. Everything can happen. Anything, I should say, anything can happen. So if we're going to be trading what we see, technically, this is kind of forming a bull flag. The ranges in a regular trading hour session have been small. Volume hasn't really been all that impressive on this pullback to the downside, and overall we've been losing open interest. So technically we could be set up to move this thing higher. Fundamentally, things can change in a heartbeat. We have to be ready for that. Here's the 30-minute chart. All right. So here's Friday, lost open interest, lost open interest here, gained open interest here, lost open interest here, narrowing ranges, lowering volume, losing open interest. A breakout above this line technically could bring us to a pretty decent upside move. Again, we gotta just trade what we see, and the unknown information, I guess, is going to have to take care of itself by hitting our profit target or our stop. What do we have as far as overnight inventory? We got some longs in overnight inventory. Overnight inventory begins at 5 p.m. Central Time. We're not holding a whole lot of overnight inventory here. All right. So, do we have many points of contact on this upper trend line here? We don't. We have two. We have this and we have this. So if we find acceptance above this line, that may be a breakout above what may end up being a bull flag. But everything is so contingent on the news today. I mean, we're still waiting for pending home sales and the FOMC announcement today are the two majors that we're still waiting for that may affect these markets. So do we have an opening with a gap? It is entirely possible that we open with a gap. If we can't close the gap and we find acceptance above this trend line, it may have me starting to look for opportunities to buy weakness again. It's been a tough couple of days because my expectation, and just my expectation, and I'm usually going to be wrong at some point, is we've been building open interest on up days. That's a new thing. We've been losing open interest on down moves. That is also a new thing for this year. Everything can change, of course, today with anything that comes out or anything that happens. I'm not expecting the FOMC meeting to be a big event today. If it comes out as expected, it should be baked into the market. There'll be some knee-jerking, and we'll go back to what we were doing. The economic information this morning didn't do any real damage or help the markets all that much, so we're still just kind of looking for technicals to look for opportunities. Overnight inventory is long. We have a gap. I will look to trade the direction of the gap unless we can close that gap. If we find resistance up here, that's something that can help us limit risk along this trend line. And I'm going to try and stay very patient today. Like Ray says, we got to get us some wildebeest, so we're going to try and be patient today. Crude oil. So day 4, in an indecisive range, we got lots of small candle bodies and long shadows. The market's looking for new information. It doesn't know what to do, much like most of us, including myself. 1, 2, 3, 4 points of contact on this trend line now. Ranges, volume was pretty good yesterday, but open interest, we lost less than 100 contracts. There was no change in open interest or direction yesterday. We're in short time frame control here, ladies and gentlemen. It may complicate or simplify things. We're getting a nice move off the opening range here, right from the middle of of the area of value, the value area. Usually, I'm going to be patient looking for these opportunities, but it's taking us to an area where we have seen rejection, excess. No real excess down here, is there? Take a look at the TPO chart. Looks like we've got a little bit of excess here. Yeah, we had a little bit of excess there. Rejecting value. Are we going to continue this move to the downside? If we were going to be thinking about that, we've got our area of resistance here that we tested to. We've got another assumed trend line that we're just going to pop in here. Could we have a measured move all the way down there? Look at what we've got below. We've got a gap that remains unfilled. We've got a naked point of control down here that remains unfilled. And 90.45 is weekly kickoff low. This market could certainly target that, and that should hopefully bring gas prices even lower, which, as we were just discussing, could bring prices down, as our good friend Vince and all of you were discussing. We're kind of in the middle of this area. We're kind of getting close to some previous lows. Last week's low is an interesting area. There may be some fish down there. Last week's low, we rejected it Sunday night, Monday, Tuesday, Wednesday. An interesting opportunity there. And to the Nasdaq. Okay, similar but different. The Nasdaq was weaker on the way down. It closed right on this trend line here. I don't know why this is a line. This should be a array wildebeest. It closed right on that line yesterday. Right on it. Looked below it, closed on it. Now we're back above it. Bull flag? Could it be? We added 1,700 in open interest yesterday. So it is acting a little bit different. It's deeper. It's a bigger up move. Got closer to weekly kickoff high. It's a deeper down move. The S&Ps didn't even get to this trend line here yesterday, as far as I can remember. Maybe we'll go back and look at that. But yesterday's volume was pretty good. I think the open interest was kind of moot, and an additional 1,700 is a lot for the Nasdaq. Tech news was positive. Google and Microsoft, even though they missed on earnings per share and revenue, it seems as though they had some good news outside of that boosted the market. And it was, anything that was in there was probably already in the market. So take a look at the 30-minute chart. Look at this. I gotta get it right here. There it is. Now it populates. So those three highs extended. We looked below it and we settled right on it yesterday. Right on it. Everything is a zone, remember. We don't have to be finite and perfect on it with everything. And then we rejected. So here we are in our bull flag formation. And we are looking to open with a gap. And in the Nasdaq, that bull flag formation is a little bit pretty much right where we're at right now. It's going to be an interesting opening, ladies and gentlemen. With a lot of folks probably thinking we need to wait and be cool. At least this gives us the opportunity with a small gap to limit risk, with the trend line right here also to help limit risk. You might find some fish here. And like I said, I'm relegating myself to the fact that I'm going to miss some trades today. Hopefully I'll only miss the bad ones. Gold. Short time frame balance. Last day for August, there was still some higher volume in August today, which I was kind of surprised. But you're okay trading either August or December. We're going all the way to the December contract. There's a couple of contracts between there that don't get much trade. If you get to the December contract, you'll see much higher volume than the September and October. Okay? Either's fine today. Adjust your levels accordingly. So, where are we? Well, we've established some pretty solid lower extreme of these 4 days. I'm finding those to be very interesting. Short time frame control, we're in the teeth of rollover. Take a look on the 30. So here's our really kind of solid lows here. We've got a descending triangle formation where we've got 1, 2 points of contact, 1, 2, 3 points of contact along the bottom, and we're in the middle of it. I don't see that there's any big reason to be all excited about the gold today. We opened outside of range and value. We left the opening range, I believe, at the high of the session, but that only took us back into range and value from yesterday. We took a look down near our lower extreme of balance here, but not very close, so I'm not going to be taking that trade. I'm just going to be, again, patient, and if I can find opportunities near these trend lines, I might think about it because, again, I can lower my risk there. Anything in the middle here, I'm really not that interested in, which you guys hear me say probably quite a bit. So here's the euro. Boy, we had 1, 2, 3, 4, 5, 6 days of an attempt to get back to or above the weekly kickoff high that was just rejected every time. So finally yesterday, our longs got too long trying to break out above that, and we adjusted that inventory. But we actually added 5,000 in open interest. That is a bit of a surprise to me, coming off of a kind of a ledge to the upside like that. I would be expecting some shorts, some longs to just bail out on that, and I thought we would see some lower open interest. So again, the markets make a liar out of me. We're still largely range bound, short time frame control. The dollar is likely to have a relatively decent move today. If anything moves the dollar, take a look at the 30. So we came down yesterday and filled in an old gap from the past. Yesterday we created a new upside gap. We've got a little bit of visual down here in the fact that we've got a naked point of control here, and then last week's low is right at that naked point of control. So there's a little bit of confluence here if we get the opportunity. We don't have a gap here. We're trading inside range. We're wrestling with accepting value. If we continue to push higher, there's plenty of space to come back up and close this gap up to, what is that, Monday's low. Not that interested in trading it today. My focus is going to be really on our equities. I think I have the best look and feel for those at this time, and I'm not seeing anything compressing here in most of these other markets. We've got day 3 in balance in the 10-year. Rates are going to change today. Apparently, the market is aware of that and has baked in where it's going to be. Here's the 30. Most of our most recent visual levels are below us. We tested to last week's high and rejected. We have a gap left from last week where there's a naked point of control running right through it, another naked point of control, and last week's low. I'm really not interested in touching the Treasuries today because they're going to be hypersensitive to anything that is discussed. We still have our yield curve. The yield on the 10-year is lower than the 2, the 5. It's just another signal of recession, which, if we look at the tea leaves, we're in one. Tomorrow we'll get GDP, and that may seal the deal or leave it in question. Natural gas, boy, we had a big pull off that looks like stiff rejection on the daily chart. We had an open interest increase off that high, 6,100. That wasn't just profit taking. Ladies and gentlemen, there was some new sellers coming into that market. We had a B-shaped profile, which indicates a long liquidation, but I think we ran into more than that yesterday. Take a look here. We have new short bets in this market. It was not really expecting that. That auction to the upside was so strong. So if we are going to have some sort of a reversal, I don't think it's possible for us to put a island top up here. We don't have a gap today. I can check the profiles on that here real quickly. We do. We do. We have right now an island top. If we can't close the gap to yesterday's low and we continue to push lower, this could be a pretty strong reversal signal. The island top. I don't like what they call it in candlesticks, but so I don't want to say it. Okay, so let's go back to this. So here's the 30. We have the gap. Our gap still remains, at least for now. It looks like we just may have closed that gap. So our island top is no longer that important to us. If it is, here's the B-shaped profile. So that's an indicative of long liquidation, profit taking. We were looking at that, warning about it yesterday morning, actually. I was writing it down long before the market forecast, and it ended up happening. I was looking for a contrary move to see some profit taking, and it happened yesterday. So, boy, we were really attempting to close that gap. If it can't, look out. So, again, we've got a gap. We are closing the gap. If we get back into range and accept back in value from yesterday, that's the value area special situation play. And that says that if we open out of range and value, we show signs of reaccepting inside of the previous day's area of value, there's a high probability that at some point during that session, price will return to the other extreme of the value area from that day. It's very subjective as to what does acceptance mean. When I first learned this, we needed 2 30-minute bars to close back inside the previous day's value to mark acceptance. It's a tricky play. Sometimes it's going to go bam, right to it. Sometimes it's going to go peek in, peek out, peek in, peek out, peek in, peek out, like a little clownfish in an anemone. What is it? Anemone. Anemone. I'm a piranha. All right. So, I'm not going to be trading this today. For those of you that are, I pray for you. It is a tough market. Okay. We're getting a little bit long-winded here. We got about 7 minutes before the open. Do markets tend to close gaps on futures rollover contracts? For example, gold now has a gap between... No. It's just a... It's a discount, or it's a contango or backwardization of the contracts. So you're really generally not going to see any kind of adjustment back to the price for the expiring contract. Okay. Would you say a 50-point rate hike would be bullish? Conversely, 100-point. I don't know, TC. We can speculate on that all we want. I'm not an economist, and most economists don't know what the hell they're talking about anyway. So I'm going to be watching the response in the market to make any trading decisions today. Yes, Joe, we do have group coaching today at 1:00 p.m. Central. I'm going to put the link into the chat right now, so anybody that wants to come can register. Now, I'm going to start it at 1:05 today because of the release at 1:00 of the FOMC information. Maybe we'll be able to watch some fireworks together while we're in group coaching. Have you hugged your VWAP? Does J. Powell yak today after the announcement? Yes, at 1:30 p.m. Central begins the chair press conference. I'm more worried about any questions that they send his way. Natalie, good morning, and trading family. New here, first day joining you. Hello, everyone from Greece. Natalie, welcome. We're glad you're here. Thanks for saying hello. You got questions, things that you want to ask about, go ahead. If we can't address them here, we can address them in group coaching, where I just put the link into the chat. Register, bring your questions. I always say I don't know them all. I don't know everything. Nobody does. And if I don't know, I'm the one that's going to tell you. And we're going to have the opportunity to learn something together. I'm telling you, I learn more from you in the group coaching than you probably learned from me. There's always more to learn in futures trading. One thing we have to learn is to take our deep breath. Stay humble, grateful, creating, and patient in your trading today. Get out there and profit. Take it easy. I already know I'm going to miss some trades today. I have to be okay with that. And I'll look for opportunities that come my way, not the ones I'm looking for. Okay? All right. Trade well, everyone. I'll see you in the proverbial trading pit here in just a couple of minutes. And, if you have more questions, join me for group coaching. It's always a lot of fun, and I enjoy the challenges. Trade well, everyone.